But first, let's talk about what's going on in Washington. The latest there, we've got the back and forth happening on infrastructure, as we could see a group of Senate Republicans come with a proposal for $1 trillion in spending, potentially offsets with increasing taxes, but there's still some back and forth to come. Eric Cantor is joining us now. He's the vice chairman of Moelis and Company and former House Majority Leader. Eric, it's good to see you. Thanks for being here. Where do you think this ends up in terms of infrastructure as we see this back and forth that, maybe isn't taking longer than people expected? I guess it's taking just about as long as you might have expected. But where do you think the number ends up?
I think it's interesting, Joy. It's good to be on, but I think it's interesting to sort of look underneath sort of the top line, if you will, and look to see where folks really are on the Hill. And there's a lot more agreement than is being covered in the media right now. The question is going to be whether this administration and then my side of the aisle on the Hill is desirous of actually doing a deal or not. And obviously the Democrats will have the ability to go their own way. It'll be very difficult for them to do it by themselves. And I think ultimately better for the country. I think a better outcome substantively if there is a bipartisan agreement. But I do think that the time is ticking, and probably within the next couple of weeks, there's going to be an answer whether this will be an infrastructure package of Democrat design and design only, or whether this will be something more reasonable and more focused and targeted. And if so, it will be a bipartisan bill.
Eric, you sit right in that intersection of government and global business. How concerned are CEOs and other executives about potentially paying more on the corporate tax line, and how detrimental would a tax hike be to global businesses?
I don't think there's any question that, decision makers at both large cap, mid cap, as well as some of the investors in the emerging growth arenas are looking at what is going to happen on the tax front in Washington. And if you set aside their philosophical viewpoint as to maybe what should or should not be in terms of their view of what is quote unquote fair, I do think that an increase in taxes is going to make us in this country and make American-based multinationals less competitive. Obviously, it may very well impact equity values. I think there is certainly a concern about this. But as we know, there is a populist strain on both sides of the aisle right now. And if you look at the public polling, increasing corporate taxes is something that is met with a lot of receptivity on the part of most people.
Eric, you just told us that on the infrastructure side, there's maybe more agreement on some things than is being reported. On the tax side, I would kind of ask the same question in terms of where you think policy could head. We talked to Wall Street strategists who some say there'll be no increase. Some are penciling in, an increase to 28% or 25%. Is there a number based on your conversations that to you feels most likely?
Well, I think, first of all, the threshold question is, will this be a binary choice for people like Joe Manchin or Kyrsten Sinema, the sort of moderate Senate Democrats? Because if it's a binary choice, then that means whether the Biden administration says you're either going to vote for a Democrat-only bill or nothing. If that is the case, I do think you're going to see an increase in taxes. You will see, I think, most likely what Joe Manchin has already said. He's against a 28% corporate tax rate, but he would live with a 25% corporate tax rate. And again, as you know, things are so close in terms of the margin in both houses that somebody like Joe Manchin can make or break what the rate is. So I think if it is a Democrat-only bill, you have the word of an individual who can make it happen. It'll be a 25% corporate tax rate. Now, whether if it's a bipartisan bill, my party's not going to support increase in taxes. So what will happen is they'll put all I think what most people would consider real infrastructure into a package. It will not be paid for with tax increases. And what will then happen, there'll be a subsequent attempt by the White House to bring along all the Democrats in the Senate, as well as most everyone in the House on their side of the aisle, to pass another bill that would be paid for with tax increases. That gets really difficult for individuals who sit in very moderate states and districts, and frankly, individuals in the House who want to run statewide in some of these states that are much more of a swing scenario.
You know, I love this thing that we're talking about between sort of what's out there and what's happening in internal discussions. And I would ask you that along those same lines in the corporate world. I mean, I don't know how much you can tell us on these kinds of issues, but, you know, we're watching the situation, for example, with Exxon unfold today. And I know you have some experience and ties in the oil industry. You know, this push against Exxon to sort of be more ESG, a push that we're seeing in many companies, but it's unique at an energy company whose bread and butter is not necessarily ESG. What are you hearing behind the scenes on those kinds of issues, the environmental, social, and governance issues?
Jody, there's no question. ESG is a topic that comes up regularly in conversations across the globe. And increasingly, you're seeing it occur with the investor class here in the United States. There are individuals who oversee large portfolios looking to see companies take steps to recognize all three, E, S, and G. And we've had the E on the environmental side a while involved in conversations. And I think, you know, in terms of board governance, in terms of diversity of representation on boards and senior managements, that's been around a while as well. But I think even more so now, you're beginning to see sort of the S and the social sustainability, if you will, become much more present in conversations. And what's interesting about that is, you know, an S to a company that operates perhaps in the Middle East is much different than a company that operates in Europe or in the United States. And so I do think, though, this is driving a lot of what the institutional investors are talking about. And as we see, as you indicated, playing out in a proxy fight with Exxon today.
And Eric, the tone in DC has cooled down a bit compared to, I would say, compared to the prior administration. There's no ifs, ands, or buts about it. Has that helped the M&A market?
Well, I think right now, you know, the M&A market had one of its best years ever in 2020. And in fact, we just came off of a first quarter in 2021 that was the third consecutive $1 trillion M&A quarter going. So, I mean, three quarters in a row. So it wasn't as if maybe the chatter, the Twitter activity, et cetera, was necessarily dampening M&A before. But I do think right now you have an awful lot of capital out there looking to be invested. You clearly have historic levels, low levels for debt, and you have lenders willing to lend. And you have, you know, there is this sort of, you know, intangible impact of what we just come through with this pandemic. And in a way, the acceleration of technology and disruption that has occurred because of that, I think all of that sort of leads to the desire to transact. So there's no question that there is a robust sort of atmosphere right now in terms of transactions. I think the only real headwinds that is out there is the overhang, if you will, of regulatory shifts. Certainly, as you look to M&A and DOJ, FTC, there's concern there. And certainly on maybe some of the more strategic transactions outside of the sponsor world that may be looking to see what Washington is going to do on that front. And obviously, as we talked about before, the issue of taxes. And this could be an accelerant this year if it really begins to materialize that there's going to be a tax increase and perhaps an effective date of January 2022.
Very interesting. To close this out, Eric, I just want to circle back to sort of pure politics for a moment and ask something about you personally. And that's whether you mentioned earlier our side of the aisle. So clearly you still view yourself as a Republican. But I wonder how you feel about the modern Republican Party. And I think you referred, I can't remember the word you used, it was fringe elements or more extreme elements within both parties. But how do you feel about the sort of current constituency of the Republican Party and the leadership?
Well, listen, I still go back to say right now, this is still a party that's very focused in its quest to make sure that America maintains its position as a leader in the world, as the most competitive place for capital to flow, for businesses to be formed. And ultimately, my sense as a conservative is we are about equal opportunity and upward mobility for all. And clearly, there are a lot of issues that have not been dealt with by either side. And right now, I think the atmosphere does not lend itself to consensus building or in any way resolving some of these outstanding issues. And I think we're going to get there because, again, having the ability to be with Moelis and Company and the global presence that we have and interacting with business people as well as heads of government and ministries around the world, there's just no better place in our country to transact, to live, to work. And so I'm an optimist about my party in terms of its advocacy for free markets. I'm not sure it's being accentuated right now, but I don't like the direction that the other side is heading in right now with higher taxes, with much more government involvement in the economy. I think in the end of the day, that's what will bring Republicans back to focus on what agenda is unfolding in Washington and their opposition to that agenda.
Eric, do you think the Republican Party can achieve what you're talking about, or is Donald Trump still too much of a distraction?
Well, listen, there's no question that Donald Trump attracted a constituency that wasn't necessarily enthralled with where the Republican Party was seen as positioning itself. As we know, globalization and all the things that have occurred over the last couple decades did leave a lot of people behind. And Donald Trump was very effective at reaching out and capturing the attention of individuals who felt that they had been dealt a wrong. And that those are a constituency that, frankly, are looking for better jobs, or looking for upward mobility, really looking for that equal opportunity. And I do think that there's a natural place for that constituency in the Republican Party with our message of entrepreneurialism and of education access that can equip people for the future. And again, much a believer in free markets that I am, it is in great contrast to what we're seeing being undertaken by the Biden administration and the Democrats on the Hill, with this explosion in the size of the federal government in a lot of different parts of our lives that we aren't used to. And I think as Americans, really, I don't think we'll tolerate.
Well, I might argue that Donald Trump is not such a fan of free markets either in some of his measures, but we'll table that discussion, Eric. We'll have you back and we'll talk much more about all of these issues, especially also as we see infrastructure and taxes make their way through Washington. Eric Cantor, Vice Chairman of Moelis and Company and former House Majority Leader. Great to see you, and thanks for being with us.
It has been an important week for investors in Coinbase, with shares being under pressure due to the correction in crypto prices. Goldman Sachs and JP Morgan have come out and defended the company with bullish ratings and price targets. Let's chat more about Coinbase with its CFO, Alesia Haas. Alesia, good to speak with you here this morning. Help investors understand what you're seeing on the platform now so far this quarter compared to what you saw in the first quarter. I mean, crypto prices have been under a lot of pressure, and volatility has certainly picked up.
Ryan, thanks so much for having me today. So, welcome to crypto. I think that those who were new to this space may have underestimated the volatility that we can see in this market, but crypto is volatile. It's been volatile since its founding, and we just have to remember this is a really young industry and a very nascent asset class. So, while we have been seeing a lot of volatility, we've been dealing with this since the very beginning. And the momentum that we're seeing continues. There's a lot of interest in crypto. We shared on our first earnings call just recently that the momentum we saw in Q1 had continued into Q2, and that we're optimistic at this point that we're going to see similar levels of excitement on volume on our platform that we saw in the first quarter.
Hi, Alesia. It's Julie here. So let's say that volatility continues and there are still a lot of users on your platform, but I wonder from a financial perspective, how that affects your planning. If you need to raise cash by selling shares, for example, and it's difficult to predict the trajectory of the shares because they track with crypto, for example. So how do you sort of manage around those issues?
We've talked a little bit about this before. We think about running scenarios because our business is inherently difficult to forecast, as you've mentioned. There is a lot of volatility. And so the way that we plan is that we look at ranges of possibilities, ranges of outcomes of how many MTUs are going to transact on the platform. What is their typical volume going to look like? And we plan for scenarios that are up. We plan for scenarios that are down. We look at past performance as a good indicator of what could happen, although we obviously don't have a crystal ball and can't tell you exactly what will happen. And then based on those scenarios, we plan our expenses. We are planning to grow our business for the long term, and we are going to invest in our people and our technology, irregardless of what the revenue cycle is. But when we're making those long-term investments, we're looking at what is the resources that we have on our balance sheet, and can we ensure that we can grow cycle to cycle and not be caught in any potential downturn in a crypto winter that we would not have the resources to continue to grow.
Alesia, a lot of focus at the company on institutions. Where are you at in gaining institutional business on the platform?
Institutions has been a new trend really starting in 2020. So retail was the initial driver of crypto, and back in the time the company was founded, we really started as a retail platform for users to come on and buy and sell Bitcoin. We've seen huge growth in retail, but then more recently, we've seen huge momentum in institutional. Over the last 12 months, we now have seen large asset managers, increasingly corporate treasuries, but also pensions and endowments and insurance companies all start to explore how crypto belongs in their investment allocation. And what I would say to you is it's all quarters of the institutional market. And they're coming to Coinbase for our custody offering, that we are one of the largest crypto custodians with over $200 billion in total assets on platform, with over $100 billion devoted to institutions at this time. But we also offer a deep order book in terms of liquidity and the ability to have best X. And so now with the fragmentation of assets trading on so many exchanges and so many market makers, we can find that best price for our users. And we're effectively like their outsourced treasury department to ensure they can find the best pricing in the pairs that they're trading on. And we're really excited about the growth that we're seeing on the institutional side.
You know, Alesia, you kind of referenced towards it there, but I wanted to ask how you guys are thinking about really the boom in DeFi. At least from my vantage point, it seems like the crypto space right now is mostly talking about the opportunity for DeFi exchanges. And I think you guys have said comments to, look, if the space is growing, we're happy to see that growth as well. What are those conversations like, you know, with your institutional clients and just internally as a strategy team?
So DeFi is such an exciting space. As you've alluded to, it's grown over the last year to now close to $90 billion in the DeFi markets. Obviously, it's come off a little bit over the last week or so. And for those who are unfamiliar with DeFi, DeFi is decentralized finance. These are peer-to-peer applications like lending or insurance with no intermediaries. They're 24-hour a day, 7-day a week, essentially banks, providing some of the same financial services that you got from a traditional financial institution, but through a smart contract, through pure technology. We're really excited about this growth, and we think first and foremost it's going to open up new doors to consumers. And we think that because these are smaller ticket transaction sizes right now, and so not quite at the size that are serving institutions, but it's such early days that I think that we'll see a lot of growth here, and over time institutions will come to the DeFi market as well. So Coinbase is trying to make it easier to access DeFi. We're trying to more closely integrate those experiences into the Coinbase platform so users can quickly go from centralized finance to decentralized finance and explore this entire new economy that's developing.
And, you know, Alesia, the DeFi is kind of sometimes contrasted with TradFi, which now makes us here at Yahoo Finance feel like boomers for talking about stocks. Do you guys think about that? Do you think about that, you know, distinction that way? Or to you, is it just sort of, well, the world is going towards more digital assets, call them whatever you'd like?
That's how we think about it. We think the world is going so that all forms of value, I mean, we're seeing it with NFTs, with art and with other real world assets, but all forms of value now have the opportunity to be represented digitally through a crypto token. And we want to be the marketplace that you come to explore all of those exciting digital assets.
Alesia, before we let you go on a personal note, you have extensive board experience. You've worked at a lot of large financial institutions. What is it like trying to build a business such as crypto, and which is now a publicly traded business in Coinbase?
It's fun. It's a lot of fun. It moves at a pace that I've never seen in my career. there are more opportunities, more things that you have to conceive out of thin air to basically bring to reality. And I love the challenge. I love the talent that I'm surrounded by. These are some of the smartest people I've had a chance to work with in my career. And I'm really overjoyed that I came over to Coinbase when I did.
Good deal. Well, we look forward to staying in touch with you. Coinbase CFO Alesia Haas, good to see you. Have a great Memorial Day weekend.
Thank you so much.
Interestingly, though, you didn't see JP Morgan CEO Jamie Dimon there in person. He didn't travel for the shellacking there in front of Congress. But Americans are traveling more and more. Over the weekend, we saw the highest number of travelers at TSA checkpoints since the pandemic, crossing 1.8 million passengers screened Sunday. But of course, that's mostly leisure travel. We've still been waiting for an uptick in business travel to come back, and a lot of airlines might be worried about what the future of travel looks like, particularly in the back half of the year once we get past the pent-up demand for leisure travel. And joining us now for more on that is our next guest, Mike Boyd, Boyd Group International President. And Mike, thanks for coming on. I mean, when we look at it, obviously people have been cooped up. People want to get out there, so we're seeing that uptick now. But it doesn't look like airlines are necessarily across the board boosting travel demand for later in the year. So what are you watching as maybe a potential warning sign there?
One of the things we're looking at, for example, United Airlines has cut about 5% out of its schedule in August. They may be seeing something that isn't obvious right now. We think there's going to be a spike, but it's still going to be well below 2019. And next month, they're going to be about 86% of the capacity we had in the same month in 2019, but it's going to be a lot less passengers than that lower load factor. So I think this is going to be the bellwether. We're going to see whether it really is a bubble, people wanting to get to see grandma, which they couldn't do last year, and whether it falls down after Labor Day, which it may do. But as far as business travel goes, it's not coming back to where it was. It was declining before, and this just shoved it down even further.
And Mike, some would argue it's not going to come back to pre-pandemic levels, largely because companies have learned to operate without having to travel so much. I mean, to what extent can travel overall, the activity, return to those levels we saw in 2019 when you consider that businesses have likely adjusted to this new reality?
Well, the reality is that air travel as a communications mode is very different than what it used to be 30 years ago. 30 years ago, you had to fly between Albany and Boston to do business. Today, there's nobody traveling there because you can do it virtually like we're doing here. So that's not going to come back at all. But business travel, again, air travel as a communications mode is very different than what it was 30 years ago. And the pandemic just pushed it even further down. So a lot of that travel is not going to come back because it just doesn't work anymore.
Yeah, when you look at how that impacts the airlines specifically, these companies trying to show investors that it is coming back, I mean, which ones are you watching that might be more levered to that? Because we've had a few guests come on say that Southwest was in a good position because of the way that they lean on leisure travel.
Well, yeah, but they're not all leisure travel. That's another thing, too. There's some myths about Southwest, a great airline, but there are myths that it doesn't have hubs. It does. There's myths that it's all leisure. It's not. You know, it's going to be affected, too, if business travel drops. The carriers you want to watch are ones like Spirit and Frontier, Allegiant. They're the ones that are virtually all, not all, but about 95% leisure travel. They're the ones that are in line probably to absorb some of those discretionary dollars that are out there with people who couldn't see grandma last year.
Mike, anybody who's booked a flight for the summer over the last few weeks has seen just how high those prices are now. I would imagine a lot of that also because of capacity limits for these airlines. While they have added to their capacity, certainly not at full scale like we saw pre-pandemic. What are we anticipating in terms of prices? Are we likely to see it high for so long?
I think we will. Second of all, we've got other policies in Washington that are definitely going to jack fuel prices up. That's down the line as well. So we have a number of things coming. Don't look for a deep discount in air travel in the next year. It's just not going to be there.
I've got one more for you here, Mike. When we talk about the bellwether of what this holiday, this upcoming 3-day weekend means for what the rest of the year could look like. I mean, when you try and project that out, we got 1.8 million on Sunday. What are you looking at for Memorial Day weekend in terms of how many people might be getting back to flying again?
Well, it'll be heavy, but let's put it in this context. In 2019, there were about 930 million in plane passengers in the United States. This year, our forecasts show it's going to end up about 650. So it's still going to be below what it was in 2019. It's going to be growing, but we'll know more about what's going to happen after Labor Day. When that happens, then we're going to see whether it's going to be 650 million or 700 million, but it ain't going to be where it was in 2019.
And finally, Mike, going back to what you said about the prices, you don't expect it to drop anytime. I mean, I asked this selfishly because I've seen trying to book just how high it is. My parents just booked a flight in New York City, $800 round trip on United. And that is not at all where the price was a month ago. So how concerned are you that those prices staying so high with the airlines necessarily not adding to capacity? I mean, is the demand and the desire to travel strong enough to keep this going, even with the price tag that high?
That's a really good point, because keep in mind, price is what drives the leisure traveler. If it's way too high, they're not going to go to the wedding or the bar mitzvah. That's all there is to it. And that's going to be a balance. But I think airlines are going to tumble to the fact is they can't replace that business revenue. They're going to lose and are going to continue to lose by gouging people who want to go down to Miami. They're just not going to be able to do that. We're going to have a change in the model a little bit in terms of realizing we've got to get their costs down even further.
Let's bring in the CEO of Flywire now, Mike Massaro. Mike, thanks so much for being with us. You initially raised a little over $250 million. You boosted the size of the deal to $10.4 million. As Kristin just said, it initially priced at the high end of the range of $24 and shot up right at the opening bell. Just want to get your thoughts on how the day is going so far for your company.
Yeah, well, thanks for having me. It's been an amazing day here at the Nasdaq. Just seeing our team come together for this awesome, amazing day. We couldn't be happier with how we're being received in the market. We had a lot of great interest, in the IPO, and couldn't be more excited. Trying to take it all in, frankly.
Well, absolutely. Congratulations to you on this opening day, Mike. I do want to ask you, because so many industries, as I'm thinking about it, and especially because of the pandemic, are going through almost a lot of growth, a lot of innovation, experiencing digital revolution. So just moving forward, where do you see some of the biggest growth opportunities for Flywire when it comes to that payment processing?
Yeah, so for us, we focus on high-end luxury, complex payment industries, really large transaction sizes. So you'll see Flywire used in industries like education to make a tuition payment, pay a healthcare bill, maybe go on that travel experience you've been waiting to go on, or make a business payment. So those sectors are just drastically underinvested in, and so it's almost like you're going back in time on the internet. Maybe 10 or 20 years when you're trying to transact in those industries. And what we're trying to do is digitize that in the same way that we've seen e-commerce and point of sale retail payments really be digitized over the last decade. So we couldn't be more excited. These high value payments, huge opportunity, and frankly, people are just sick of having bad payment experiences there, and they want to do, use software to enable more there.
Mike, I know that during the pandemic, you made an acquisition. You bought Simply. It was a provider of healthcare payment and collection software. Is that where you see the most growth in that sector in particular, in healthcare?
Yeah, healthcare sector is growing quite rapidly, nearly half of the size of U.S. e-commerce. Healthcare payments, it's a massive need. Obviously, more out-of-pocket spend by patients. Providers want to provide affordable payment solutions for people to make payments and to pay those bills in a modern digital way. But we see growth in all areas. The education business obviously continues to grow. We have clients in over 30 countries. And frankly, travel with the pandemic, we've all been locked in our houses for 14, 15 months here. I think really travel is going to open up, and Flywire clients are managing some of the best properties in the world for people to travel to. And I know I, for one, want to get out there and go travel the world.
Well, you don't have to tell us twice about that. It's all we've been talking about, when and where we're going to take a vacation. I think Alexis and I have Greece on our target list. Mike, I want to ask you, as Alexis was mentioning, raising $250 million, have to ask, especially as you've gone public, what do you guys hope to do with this new infusion of capital going forward?
Yeah, you're going to see us continue to staff up. Our employees, our flymates, as we call them. You're going to see many more flymates coming into the business. You're going to see us go into new geographies, expand the business by getting a broader global footprint. You'll see us enhance our payment capabilities, so adding more bank accounts, more ways to pay around the world, and doubling down on our software, right? Our clients look to us to innovate in these industries, so more product, more engineering, delivering great solutions for clients. So that's really where the focus is. You may see us do some additional acquisitions in the future, but right now we're going to focus on our own execution.
I know the business is still in its building mode, its growth mode for sure. You keep seeing revenue rise, but you're still reporting a net loss. Any timeline are you looking out? Can you guide investors at all on when the company may become profitable?
Well, you can actually see as we, in some of the public information, we actually had EBITDA profitability in 2020 as part of the pandemic, spent less, grew less to focus on the company, make sure the world was not falling apart when it came to the future of tech companies and payments. And, we started to accelerate those investments again. We see growth everywhere, opportunity everywhere. So I'd expect us to continue to put the accelerator down here for the foreseeable future. Definitely over the medium term, 3 to 5 years, the focus is on growth. Beyond that, like a lot of payment companies you see, it's a great economic model, the combination of transactional revenue and platform or software-based revenue. That combination really does give you great profitability in future years. So we're focused on growth now, but in the long term, you could expect us to see closer to profitability.
So Mike, you just mentioned innovation, at least when it comes to the payment space. And I think the one thing that is on everyone's minds right now, especially when it comes to payments, is cryptocurrencies and also the technology that it's based on, which is blockchain. How do you guys see that impacting Flywire going forward? Is there any potential that you guys might incorporate accepting cryptocurrencies as part of the payments, or being able to ensure the acceptance of cryptocurrencies, or perhaps even incorporating that blockchain technology into what you guys do?
Yeah, for us, we always try and find all the ways in which people want to pay. If that's a given currency, a given payment method, we want to provide all those choice to our clients and their payers. So for us, some future crypto or stable coin definitely, kind of could be in the plans for us. At the same time, we need to ensure that the methods are properly regulated, that things are stable in those industries, and we're again high value, high stakes payments, things like college tuition, healthcare bills. People want to really do make sure that they have kind of reliable long-term ways to pay for those things. So I see us definitely looking at crypto on the roadmap, but right now no short-term plans.
Okay,
right, so
I want to talk to you about privacy, which is sort of at the crux of the payments industry. We've seen a lot of issues, not good, in the space. How are you guys helping to keep those transactions secure? Are you using something like blockchain to do that?
Yeah, for us, obviously security, and especially the industries we touch, as you'd imagine, you have student information, you have healthcare related information, and of course payment information. So it's of the utmost importance from a compliance risk perspective to have the right systems in place. Again, our team constantly is investing to try and make sure it's the most stable, safe system that our clients can use and transact. And again, it's in a global environment, so we're dealing with all different type of global regulations related to privacy and the movement of money. Again, we have an amazing compliance risk security team that helps us really scale that function for the business. But again, always something in the forefront of your thinking in this day and age.
So speaking of your teams and your workforce, Mike, Flywire had to lay off not an insignificant portion of your workforce last year during the pandemic, like so many other companies. Curious to know if going forward you plan on scaling back that workforce again, perhaps bringing back that 12% that you had to lay off last year.
Yeah, obviously, the world a year ago was quite a unique place, and at the time, looking at how to run the business, how to run it in a responsible way for shareholders, the world changed really quick, and so, obviously, those decisions never taken lightly anywhere, but especially at Flywire. Proud to say that we have a number of those flymates that have joined us again, those that went on furlough coming back full time, and we continue to look for opportunities for that. We are accelerating hiring, probably 100 plus positions now over the next few months for looking for new flymates. So those flymates that we had, always welcomed back. In addition, always looking for great talent across our industries, across technology. So again, with this cash position we have and the growth we're seeing in the business as the world recovers, couldn't be more excited about growth and adding to the team.
All right, you heard it. They're looking to add some flymates. The Boston fintech global payments company Flywire up nearly 43% here in its Wall Street debut. Mike Massaro, CEO, thanks so much for being with us.
Let's chat about the recovery of restaurants as well as dive into the Asian American Pacific Islander restaurant community. We're joined now by Debby Soo, CEO of OpenTable. Debby, great to have you here with us. So let's first just start on how restaurants are doing right now. Are you seeing bookings, reservations increasing, especially as we come out of this pandemic on OpenTable right now?
We are. We are definitely seeing dining activity increasing. In fact, in the US, yesterday was the first day where we saw dining activity exceed pre-pandemic levels. So it's really encouraging to see. It's been great to see the recovery. The restaurant industry has been through so much through this pandemic, and it just makes me so happy to see that it's coming back. Not to say that restaurants don't have challenges now to grapple with, the shortage of labor and talent, for example, but it is encouraging to see that as vaccinations are getting rolled out, that demand is back and people are eager to dine out again.
That is definitely welcome news, Debby. But I'm curious how many restaurants on your platform have come back. I mean, we heard a lot of the stories, a lot of small businesses, many of them restaurants, having to close their doors for good during the pandemic. So how many have actually come back and are making a go of it again?
At the onset of the pandemic, we anticipated about 1 in 4 restaurants wouldn't make it. And the data that we're currently seeing supports that thesis. We have about 80% of the restaurants that were on OpenTable before that are now turned on again to be accepting online reservations. Unfortunately, there are some that just didn't make it through this tough time, but we do anticipate that new restaurants will form and emerge and likely get on OpenTable's platform.
Now, Debby, it is, as we've been discussing on this show, Asian American and Pacific Islander Heritage Month. So I do want to ask you about those restaurants that are owned by Asian Americans. If you are seeing more and more interest from consumers to go to not just Asian American restaurants, but also restaurants that are of more diverse culinary tastes or owned by a more diverse group of people.
We definitely encourage our diners to try out the wide variety of restaurants on OpenTable's platform. Because it's May and it's AAPI Heritage Month, we have marketing materials that are going out showcasing Asian-owned or Asian cuisine restaurants. For example, we recently had a restaurant on the Rebound series, a video series that highlighted George Chen in San Francisco, Chinatown's China Live. If you've never been there, I encourage you to go. It's definitely one of those destination restaurants. The food is amazing. And just really highlighting George and his team's story about what it was like going through the pandemic, how they've had to pivot. And of course, when the anti-Asian attacks started happening, his concern for his staff as they're walking and commuting to work in Chinatown. So OpenTable is definitely trying to do our part to highlight these stories and to encourage our diners to try lots of different types of restaurants, Asian-owned, Black-owned, Latinx, etc. And our platform has all of those types of restaurants on it.
And Debby, I know that you're among the Asian American business leaders who signed an open letter talking about Asian hate and ways that we can come together to abolish it. And I know that you personally even had an experience that you shared recently. Can you talk to us a little bit about that?
Sure. I often get asked, how do you navigate the corporate environment as an Asian American woman? And I feel like in the 10, 20 years that I've been in the corporate environment, there's armor I can don there. I have KPIs that I need to meet, or my credibility as my knowledge of the business, or the degrees that I've earned. Where I struggle is more in the everyday, mundane moments of life when I'm not a CEO. When I'm in the grocery store, for example, recently I was at a grocery store and I was fumbling to pay, and someone behind me was glaring at me and muttered, "You don't belong here." or the times that I'm speaking Mandarin to my son at a restaurant, or when I'm walking down the street and someone hollers "Konnichiwa." I mean, I'm Chinese, so that's not even the right language. But those are the incidents that I feel very othered, like I don't belong, and it catches me almost off guard and by surprise. Those moments, because I'm not ready for it. I'm just living my life. But in those moments, I'm just an Asian woman. I'm not the CEO. I'm not anyone besides an Asian woman.
That is absolutely terrible to hear. Debbie, I'm curious to know, because I know OpenTable does have some initiatives around AAPI support. I'm hoping you can speak a little bit more about that, and also talk about how much more allyship is really needed and how we can do that. And you touched on it just a little bit, but how we can do that even in just our dining choices and experiences.
Sure. We're doing quite a bit internally at OpenTable. So we have a people of color employee resource group. When the anti-Asian attacks first started, we launched a company-wide listening session. So a safe place, confidential place for employees to talk about how they're feeling or what they're thinking. For AAPI Heritage Month, I'm doing a sit down or a fireside chat with Jane Hyun, who's the author of the Bamboo Ceiling. So we're doing a lot of programming internally to make sure that all of our employees are feeling supported and that we're listening to them. We're also, as I said before, highlighting this cause, for AAPI Heritage Month. So we've partnered with Chefs Stopping AAPI Hate, which is a dinner series that was originally launched in DC by a group of chefs. And it's either a sit-down dinner or a takeout dinner series. And the proceeds of those events go to supporting community-based organizations. So there's a lot more we can be doing. And on your question on allyship, I think allyship is so important and it's so powerful to have allies in the room. I mean, even in my own experience at work or just walking down the street, when someone else speaks up and says, "Hey, that's not right," or "Hey, stop doing that," or hate has no place here, it makes it so I don't have to say it. And so that feeling that I've had of being supported is really what's getting me through, and I think what's getting a lot of people of color or people from underrepresented groups through this. So I can't stress enough the importance of practicing allyship. And that's part of the reason why I signed that pledge and that letter, is to really raise awareness on these issues, so people know that it is happening, and that there are things that we can do to make it better and put a stop to it.
Debby Soo, CEO of OpenTable, thank you so much for joining us today.
Amazon's big Hollywood bet buying MGM Studios for more than $8 billion. The company also holding its virtual shareholder meeting today. And you can see Amazon shares moving slightly higher, up just around 0.2%. So we want to talk about this deal and a number of other issues with Bruce Goldfarb. He's Okapi's Partners President and CEO. Bruce, it's great to have you. Let's start with the news today on MGM, because this is something we've talked about in the past, why it makes sense for Amazon to, I guess, expand its footprint in this space. But from a shareholder's perspective, from an investor's perspective, how should they be looking at this deal?
Hey, Shauna, it's always great to talk about these transactions in a very volatile and interesting market. And if you're a shareholder of Amazon, and today is a big day to be a shareholder of Amazon, what with the shareholder meeting and the announcement, you're looking at ways that Amazon is going to be able to enhance value and create value going forward. And in that regard, this kind of transaction shows that Amazon touches in so many different ways. And as a firm where we reach out to investors on behalf of our clients, we help our clients understand how those investors think and how they behave. And so when you get to a situation like a deal announcement, it's important to monitor the trading, monitor the reaction from your holders who will be buying and selling to your holders who are never potentially buying more shares, but are holding and hoping for the value to move forward. In this instance, there are so many issues that the Amazon holders are looking at in ways of interest. As I heard Adam say earlier, shaken and stirred might be the way the market is reacting.
Bruce, I do like a good martini, whether it's shaken or stirred. No problem with that. But let's talk about something else as we broaden this out, which is the lawsuit filed by the Attorney General in Washington, D.C., suing Amazon on antitrust grounds. What kind of traction might this get? And is it a threat to the company in the long term?
The lawsuit is something that's going to be an ongoing challenge and something that is hard to assess in any given day. But ultimately, shareholders will always be looking at where the value lies in Amazon and what the risk to value may be. When we think about those issues, it goes beyond any particular situation litigation-wise or any one issue. With a company like Amazon, you've got to think about not just your litigation risk, you've got to think about your product mix, the outreach campaign to get your story out there, the competitive landscape that you have, but you also have to think in terms of where your investors are looking today, and that also includes the kind of environmental and social issues that were front and center both at Amazon and also at Exxon today.
Do you think companies are under more pressure now, given the past 14 months after the various experiences that we've gone through with the pandemic and, of course, the number of protests? And you're mentioning we had the 1-year anniversary of George Floyd's death yesterday. Companies are, I guess, investors and shareholders want companies to be more vocal on this issue. Do you think companies are doing enough to step up to the plate and therefore enact the change that's needed?
It's a real challenge to find the right balance these days, Shauna. Companies are keenly aware of the issues that are important to their investors, and investors are becoming much more vocal about how important those issues are to them. When we are putting our clients in front of their investors, the discussion is both about what you're doing every day to create value for your company. What is your plan? And that plan, since pandemic times, has included workplace safety. How are you treating your employees? How is the process going in terms of creating an environment at work that deals with equity, diversity, inclusion, and also the kinds of issues about the environment in general? And companies have to face the risk to value of sustainability or technology breaks, any types of issues that they may not have addressed before. And I find that more companies are doing a better job of addressing these issues. I think if you look at the Amazon proxy material today, for today's meeting, you would see they address these issues. They acknowledge that there are differences in points of view, but that they consider and take these issues very seriously. And we're experiencing that investors care. Institutional investors have been much more vocal about how much they care about these issues.
Right.
And I think partly because their investors care.
You point out that the real question for any company is how a board makes progress on whatever the issue is without disrupting the business. You would expect Amazon and its leadership to continue to be able to go forward without too much disruption, don't you?
Amazon will have plenty of ability to move forward, but there's always issues in the world in which we live. On any given day, you have to consider all sorts of factors, Adam. And we find that things are moving very quickly. If I think beyond Amazon and I think about situations that we're working on now, the kinds of issues that concerned investors a year ago have changed. Certainly in some cases, those issues change week to week, and you need to be on top of those issues. The best companies will always be able to address those issues, but it is a constant challenge about being in touch with the issues, being in touch with your investors, knowing how they think and knowing how they behave.
Bruce Goldfarb, great to speak with you. AAPI Partners President and CEO. Thanks so much for taking the time to join us.